Do we always borrow because we need to, or are we being manipulated? How do lenders and credit bureaus encourage borrowing? Scott Terrio is here to discuss it, starting right now.
This is Debt Free in 30. Here's your host, Doug Hoyes.
Scott, welcome back.
Thanks, sir.
I believe this is the first time in 3 years that you and I have been in this room at Young and King in our Toronto office.
Our Toronto padded cell.
Which is even tinier than our
this
main
is more like a
Kitchener.
padded cell. Yours is a little more roomy in Kitchener.
For those watching on YouTube, and I set up the cameras myself because we don't have Sean, our video guy, traveling with us to every location. We cannot move our chairs. There's no room behind us. And if we move our legs, it whacks the table. So I apologize if I've pointed the cameras wrong and if you can only see our heads.
Or if we appear a bit stiff.
That's right, because we cannot move.
Can't move.
I believe the last time we were in this room was March 17th, 2020. Is that correct?
Yeah, because the next day we were gone.
Yeah, everything was shut down.
St. Patrick's Day 2020 was the last day we were in this office full time.
There you go. So almost 3 years ago, and we are back. We are not here as frequently as we used to be.
Has anything happened in the meantime?
Nothing has happened in the meantime. Nothing at all. Well, and in fact, the topic we're going to discuss today is a topic we could have discussed 3 years ago, and I suspect we could have this same discussion 3 years from now. So it doesn't matter when we're recording this.
Yeah, the only time it wouldn't have been relevant is maybe 30 years ago.
Yeah.
But in the last 20, it's certainly highly relevant.
It's an absolute no-brainer. So I got 5 questions on my piece of paper here. We'll see if we can get through them all. The first one I want a quicker answer for you so that we can get into the meat of everything else. So what we're discussing is how lenders and to a certain extent credit bureaus encourage borrowing. Which obviously they do. That's the business they're in. So I don't think that's a controversial assertion. When is debt truly a need? And when is it really just a marketing thing that they are marketing it as that need?
Right. Well, let's do the first one. So need. There are times when debt is a need. Emergencies. Mm-hmm. You know, we've had clients come to us and say, as recently as last week, I had to get my cat some surgery and I needed $3,500. And most of our clients and a lot of Canadians don't have a backup emergency fund, and therefore they have to resort to credit in order to do something that's immediate and emergency in nature. I get that. That's a backup. Also, everyone living paycheck to paycheck, which a lot of studies have shown are a lot of Canadians, rely on credit to make ends meet. And we saw this during COVID where the lowest credit score echelon of people were paying their credit cards off faster than anybody. And you and I went, well, that's weird, until we researched it and realized it's because they need their credit cards to have room on them because they're living paycheck to paycheck. So they use them and they need them, whereas the other people, it was elective. So I thought that was interesting. That's a bit of a need. If you're traveling and you're trapped somewhere and I was in Austria once when I was a lot younger and I didn't, my credit card didn't work in rural Austria where nobody speaks English and I don't speak low German. And, so that kind of thing, there's a need. Booking anything, COVID has certainly illustrated that to all of us, the importance of being able to use your credit card for online.
There's no cash anymore.
No. So those are needs. To answer the second question, the marketing of such, it's been a while. I mean, it's been a long time since the major lenders, Canadian banks and secondary lenders have aggressively marketed debt as a need. I've been out of university for a very long time, but I remember the 5 desks, they say. When you walk in on Frosh Week, the first thing you see are the 5 desks. It's the 5 big banks, usually someone young and attractive standing there and trying to get you into a credit card because once they've got you for life. So that is not a new trend. More recently, it's been aimed at, keeping up with the Joneses in the sense of how long the housing boom has gone on for 10 years plus. And, your friends are all getting stuff and they're putting hot tubs in and new decks and everything. And the ease with which you can do those with either a line of credit set up as a credit card, which makes it just cha-ching, or with a credit card itself, has been marketed to people for a long time. And, just strictly in terms of, being able to get stuff and make it look like you're making your way in the world sort of thing.
Yeah, I totally agree. So, okay, with that backdrop then, do you agree or do you disagree that lenders encourage customers to borrow by making it very easy?
Strongly agree. A lot of this stuff has moved to online. I mean, anybody under the age of 40 or maybe even 45 that comes to see us haven't been physically in a bank for a long time. I haven't, and I'm much older than that. But part of it is making things easy by removing the barrier of physically going into a place and begging for money, I guess, is if you want to market credit to somebody, have it when they're sitting on their couch with a cup of coffee or something stronger.
And there's a commercial I've seen on TV that there's a couple, they're sitting on their couch and she says, "Hey, let's check our credit score."
I've seen it.
Okay, I click a button, boom. Well, if I'm clicking a button to check my credit score, I'm probably already pretty good at clicking my button to use the app to borrow money.
And you and I have seen in our practice that the non-traditional lenders have really taken this and run with it. So they've, the installment lenders, the things that we're seeing really, really a lot in the last little while, have moved much of their business online just because of the ease with which people will be able to be approved and to actually pull the trigger on signing up for something. Some of this is mature industry stuff. Okay, so banks are aggressively selling to people because there aren't enough people, and banks are public companies. They report every quarter, so the sales pressure on bank employees is very high. And in a mature market, which banking is partly a mature market because there are only so many people, so they'll sell to people who've immigrated recently, young people who are just turning 18, as I'd mentioned before, but also it's market share. They have to get other people from other banks. And I come from I worked for John Deere for 14 years, which agricultural equipment is an extremely mature industry, and all you can do are get other people from your competitors. And banking is very much that way too. And so therefore, if there's only so much to get, and you can't get enough new people who are new to the industry entirely, then you have to go after people, and therefore you aggressively sell.
Yeah, I mean, even with high immigration, so the target is 500,000 people a year. Okay, well, there's 5 big banks, and they probably, so that's 100,000 each one. Yeah. But they probably lose 100,000 people a year because people die and whatever.
They want 200,000. Right. They don't want 100. They want 20 or 30% of it, or 60%.
So you're right. They have to grab market share from other people. And this whole idea of how easy it is. So you've given one example, which is it's right on my phone. I click a few buttons. And this applies not just to lenders here, but there's lots of offshore lenders who do that too. But if you go and drive by, walk by one of the cash places. Yeah. So there's one just down the street from our office in Kitchener. And when you drive by it at this time of year when it's dark at night, it's lit up. Yeah. It looks beautiful. They don't have, the corral you have to go through. Like at the bank, there's seats at the desk and you can go right in and it's easy. And so I think there's no doubt they do make it as easy as possible, which is exactly what a business should do. I don't want a business to make, if I want to buy a car, I want them to make it easy, not hard.
And there are payday lenders in Toronto in areas of prominence or relative wealth where they have a back door and the parking lot's in the back. So the storefront is on, Yonge and Eglinton. I won't tell you which ones.
All of them,
but there's a parking lot in the back which is full of Range Rovers because people don't want to be seen going in. So yes, it's partly ease. It's also part of that ease is removing the barrier of, in their particular cases, people not really wanting to see what they're doing. Most of them will be just getting the loans from home. But if you do want to go in, they've made it easy to just drive around the back.
Yep. Yeah. And your point about who is getting these loans, it is everybody. I've dealt with clients who are very high income, in the top 1% of earnings. I won't tell you what professions they are because I'm not trying to identify who any of these people are, but they also have payday loans and high interest installment loans.
Yeah, well, higher earners who come to see us tend to just spend what they make. So if you make $600,000 instead of $60,000, you spend $600,000 because your kids are in private school and you got to live in this neighborhood, you got to have a cottage in this area and all that stuff. And they run into, because of those cash flow issues they still run into the same jams. Yep. If they're maxed out on everything and suddenly their cat gets sick, well, guess what? So now, you end up getting a $15,000 installment loan that you shouldn't have done, but nobody's immune to this.
Yeah,
by virtue just of their income.
You're right. One little thing goes wrong, and you got a serious problem. So, let's go through some of the other examples of how debt has become easier. We've talked about, we've alluded to installment payments, and so we've done shows on buy now, pay later, and Ted and I did one on credit card installment loans, so that makes it much easier. Reverse mortgages is another one that, I don't know, maybe with the real estate market going down, that will be less of a thing. Minimum payments on credit cards. Well, that's a good one for...
let's talk payments in general. So, we've got installment payments, you've got, mortgage payments. Our entire commercial culture is set up for payments.
As opposed to paying everything in cash up front.
You don't say the house is worth $1.2 million. You when you sit down with the mortgage agent, they tell you how much you're going to be looking at paying a month. If you thought of it as $1.2 million, you probably wouldn't even pursue it.
Yeah, I can't do it.
And same with cars. Cars that are $60,000, $70,000. Nobody thinks that way. When I meet with someone and you meet with someone, we ask them, okay, do you have a car? Yes. Is it encumbered? Yes. Is it a loan or lease? Yes. Loan or the other. And they can rattle off their payments to the cent. Normally they're biweekly or weekly, so we have to kind of make them think in terms of monthly because that's also how they've been trained. But everything's payments, and whether it comes to installment loans, mortgages, even reverse mortgages, they're talking about how much we're going to give you a month or whatever, and so everything is into bite-sized monthly bits in our modern commercial life, and that has allowed the banks to sell things much more than if they hadn't been able to do that, because they can kind of zero in on what's your sweet spot? $300 a month? Oh, okay. How about $110 a week? Ooh, that sounds even better. It's only $110. Right. We get this all the time, right? Where you multiply it back out and you add people's minimum payments on their credit cards, and they realize they're paying $1,800 a month. They hadn't thought about it for so long because maybe it's a psychic defense mechanism of some kind. I'm just not going to think about this. But I will sit down with people and say, okay, so how much are you paying a month? And when we do the math, it's shocking. And then when we say, okay, well, here's what you can do in a proposal, it's massively less. But it brings home what they've signed on for and how the banks have sold them on these payments.
Yeah, and that may be the greatest marketing trick ever. You're not paying $60,000 for this car. You're going to pay $110 a week.
And the fact that you've gone so long without adding up the payments is also, I think, very telling of our culture and the banks, the aggressiveness of the selling of banks, right? Yeah. You just haven't thought of it.
We will always quote the number that is the smallest, and hopefully then you don't go and do the math. So can you think of other examples where the debt is made easy to carry so that people can, take it on, not realizing the long-term consequences?
Yes, I can, but I also want to mention here, because I think this is important. I had a guy a week or two ago tell me that, he's doing a proposal. So we often tell clients to get a new bank because they owe money to their bank. We did a podcast on this back recently. And he went to his new bank, and I warned him. I said, when you're new to a bank, they're going to sell to you, okay? And he's like, well, but I'm in a proposal. Well, I said, just trust me. And he came back and he said they offered him a credit card and a line of credit, knowing he was in it. He told them, he said, I'm in a proposal, so
Plus, it's on his credit report. It's not. Well,
they're going to know anyway. I told him just be honest with them, right? And then, but he, here's a guy in a proposal with 50 or 60 grand worth of debt he's already carrying, and they went and gave him a line of credit and a credit card. No questions asked. I said this to him, and he had to almost go do it before he could, realize that they're actually going to do this. And that's not uncommon. So when you're new to a bank is when they really, really love you these days. And that's part of the selling and the aggressiveness of what's happening out there.
And these are the types of things we cover in the credit counseling sessions that you have with us.
Yeah, and exactly. They're entirely designed, the 2 one-on-one credit counseling sessions that we do with people, and sometimes we do more, depending on what they want, is to teach people about the system. The kind of stuff we're talking about here, the kind of stuff we talk about on this podcast all the time, which is if you're armed with information that no one's ever taught you, and there's a reason they haven't, it's better for you in the future to be avoidance is better than fixing in when it comes to credit and debt. And so if you can stay out of trouble, it's usually better than trying to extract you from trouble.
Yeah, the best way to cure a broken leg is don't break your leg.
Just don't break your leg in the first place.
And then you're good. Yeah. So yes, and as part of every consumer proposal in bankruptcy, you're right. There are 2 credit counseling sessions, and really what they are is chats. We sit down with a person, tell me what's going on, what can we do to help you out? And you're right, a lot of it is some of this insider stuff that we're talking about. So, okay, so this all sounds great, but there's somebody watching us right now on YouTube or on the audio version. If you're watching on YouTube, make sure you're clicking all those buttons, people. Like and notify and subscribe and whatever else is there. I'm not an expert in it. They're sitting there going, hey, all you got to do is say no. Yeah. Like, this isn't hard. If you don't need the debt, just say no and, don't worry about it.
Yeah, and the banks see you coming on that one. So what they'll do is they will portray or paint a picture of a lifestyle or don't you deserve to take the vacations your friends are taking? Don't you deserve to have the house that you've always thought of for your kids so that your kids can have a greater place to live than you grow up in or whatever? So they paint this romantic and, sort of self-fulfillment notion picture in your mind. And it's very hard to turn that down. But I think what you can do is you can say, well, I'm not quite there yet. Okay. And you know what? You can be just as aggressive back to a bank employee. In fact, this won't be on their flow chart. So if you want to trick them into being stumped, you say, well, you know what? I do deserve that, but not yet. So I would like you to be there someday when I'm ready to do that, and I'm not yet. And so therefore, and I imagine, just don't say anything after that. There'll be a long, uncomfortable pause, but you will have won, because I think they will recognize I'm not selling this to this person right at this point. So in other words, stand your ground, but also say, yes, I want those things, but that's not happening right now. Right now, I need to do this, this, and this in my own interests. And I'm hoping you understand that to be there for me someday.
Yep. And that's why we prep our clients, because you're right. In virtually every case, we tell them, we want you to open a new bank account at a new bank so no one has access to it. But when you go in, here's what they're going to try to sell you. And have your answers already prepared. Yep. No, I don't need that yet. Thank you very much. Now, I said at the beginning, we've talked about banks and lenders. I understand why they want to encourage you to borrow, because that's the whole point. That's how they make money. But what about the credit reporting agencies? What about Equifax and TransUnion? Are they also rigging things to encourage you to borrow?
Well, at risk of being sued, I would say...
That's why I'm getting you to answer.
Yeah, that's right. Well, at risk of me being sued. What I think it more of it is it's a bit insidious in the industry. I don't think it's Equifax and TransUnion individually or both of them. I think over time, because the lenders are involved here, and there's no Equifax and TransUnion without lenders, and there's no Equifax and TransUnion without consumers. Lenders want to lend. They want to mitigate the risk, but they also want to design the system to be as lenient as possible and still allow them the latitude to say yes or no. So what I'm saying is, you and I typically see people whose credit scores are alarmingly high. Like, you're in here to file an insolvency proceeding. You got $60,000 worth of credit card debt. You're making $3,000 a month, and your credit score is 740. Have I got this straight? Yes. Okay.
Yeah,
or higher.
Very common to see someone with an 800s credit score.
Right. And they say, well, if I file a proposal, my score's going to get out. Okay. Well, I know you covered this. You covered this different podcast, but yes, it's going to go down, but you're getting rid of debt, which is more important in the first place, which is why you just told the bank guy, I'm not ready for that yet. Right now, I got to do this and this, and then I hope you're there for me Sunday. But that proves to me, and you can't shake me from this position, that the credit system is designed to get you into debt and keep you there to a certain extent. I mean, yes, there is window dressing around, okay, well, you can only have so much credit utilization, et cetera. But why am I seeing people with 800 scores who are drowning in debt?
Well, and you told the story about when you were a young boy going to school and, the credit card desks. And I remember the same thing. Yeah. And I'm older than you. But I do not recall as a 25-year-old knowing what my credit score was, because it wasn't a thing.
Until I was at least 35 and had owned 3 homes, I didn't know my score.
Yeah, and yet today, virtually all of our clients know what their credit score is.
All of them, not virtually.
And so that's because of the prevalence and predominance of these, not Equifax and TransUnion, but these other credit score providers. I don't know what the term for them is, but, we're talking about people like, I don't know if we can mention them or not, but, Credit Karma, Borrowell, Mogo, most of the different banks will even have access to that. But people don't realize that's amalgamated information from the credit bureau presented in summary format that may also be out of date. So it tends not to be particularly accurate.
Right.
And yet it's on my phone. I can hit refresh. I can look at it every day. And that becomes the dopamine hit, right?
Yeah. Yeah, it's exactly what it is. First of all, there's only two sources of your credit score, Equifax and TransUnion. Period. Those are the sources.
In Canada, that's it.
In Canada. All of these other places, the ones you mentioned, you're going to get sued, not me.
Yeah, I mentioned. We'll edit it out later.
But are versions of those. So I tell people it's not the real thing. I mean, there's nothing necessarily wrong with it, but if you want to be accurate and you show me that you're relatively obsessed with your credit score, go to the source. And so
why do they exist then? Because I can get all those apps I mentioned for free. It costs me absolutely nothing. Whereas if I go to Equifax or TransUnion and sign up for their credit reporting service, it costs $20 a month.
Because we're back to selling, Doug, right? So Credit Karma and Borrowell, and now I'm
you're getting sued too.
I'm on the legal document too. Are there to, and there's nothing wrong with what they're doing necessarily, but just know what they're doing. They are there to sell you products based on what you tell them your information is. So they get the information from you, and they target you for specific bank and lender products. That's what they do. So nothing's free. I think you said that in your book.
I believe so. Straight Talk on Your Money is still available
this
on
book,
Amazon.
Nothing is free. That doesn't mean you need to go through life being a cynical person, but nothing is free. And if you understand that, you can really see where they're coming from. What they're doing is targeting you for products when you could have avoided that targeting and just gone to TransUnion or Equifax.
Well, and if I'm a salesperson selling anything, I mean, if I'm Doug Hoyes or Scott Terrio and I'm selling consumer proposals, what do I need? Well, I need information from the person who I'm meeting with. So what do? We sit down with them and we ask them, what are your debts? We ask all this information. If I'm selling cars, well, I need to know what kind of car do you want? What do you like? What can you afford? What would be the best way to get information from people? Well, it would be to tap into their credit reports. And so if I say to you, hey, look, you give me permission to look at your credit report and I will give you your credit information and your score for free, I guess we're both getting something out of this deal. But now as the salesperson, I know exactly what product to market to you. Oh, you've got a really low credit score. Here's a payday loan. You got a fantastic credit score. Here's $1 million mortgage. And I'm going to tailor the products directly to you. So even though it's free, it's a fantastic marketing way. And so once you've signed up for one of those things, you're going to be getting all of that marketing material. You got to be really careful to be resisting it because they are going to target it perfectly for what you potentially need.
Yeah, and almost everybody does this. Google has algorithms for what you search. Amazon has algorithms for what you order and search. I mean, the reason we're bombarded with emails is because of all the things we're looking at. And so if I know your, very intimate financial details, I'm going to sell you stuff based on those. Obviously, it works because they would stop doing it if it didn't work and didn't sell products to people. And what's in it for the banks is those banks get to sell those products that they might not otherwise have sold because it's softened up in a different package. Right? It isn't TD or CIBC or whatever. It's Credit Karma, and we're only talking about your credit score here, people. It's so, this is such a it's such a benevolent service, and yet, boom! I just got you this product, this product, this product. The bank's happy. I'm happy. I made some commission off it or whatever, and now you've got something that you probably don't need. So we're back to the first question,
right? And we're not saying there's anything wrong with any of this. Again, the reason we're here today is to explain how it works, so you can be aware of what happens.
It is knowledge.
And so it's kind of like a credit card. If I pay it in full every month, it's essentially free to use. Okay, so I guess that's fine. It's only when you don't pay it in full every month that you get a problem. So, okay, let's close the show with practical advice then, because I think we've done a whole lot of practical advice already. But you've kind of alluded to some of this. But how can I avoid the temptation then of all this stuff being pushed on me? As you said, debt is really easy to get. What are the practical strategies for saying no?
Well, if you're going to be in a position to say no, you have to be in a position where someone is offering you something. And that's voluntary. You don't wake up in the morning and have a salesman sitting at the foot of your bed with a cup of coffee saying, I've got this product for you. You are entering into something. So prepare yourself to have an awkward consequence of saying no. Saying no can be easy. I'm good at it. My wife's not, and she kind of gets mad at me sometimes because I'll just say no outright, and it's awkward silence, and that's
it's the default answer.
Yeah, and I get that not everybody is good at that. I understand that. So instead, say it like what I was saying before, where the person's painting this picture, okay, this vision of the home and the perfect family setting and the vacation that all your buddies are taking, and that don't you deserve this? And you say, well, not right at this moment. Yes, I do, and I would like you to be there for me someday when I do. But also just being firm on no, and asking yourself before you're in the meeting with the person, if I had gotten up this morning, would I have gotten this product after my first coffee? Just voluntarily? Probably not. Mm-hmm. Okay, well, you don't need it now then. So again, we're back to needs and wants. We have this discussion with our clients a lot. They've gotten mostly into trouble by, part of it is back to the earlier question of some debt is necessary. Emergencies, I get that kind of thing, living. But a lot of it was not. And it was sort of an insidious creep that came along as a result of a number of decisions along the way without having to say no. And so I think if you can trim your decisions down to, these are the things I need, these are the things I want, the things that I want can wait, and interact with the person who's selling with you in that sense, that like, hey, look, I'm taking the big picture of my life. You're only taking the small picture of my life. And I don't want to be strapped into a financial decision that is a small picture thing. I would rather be looking at the big picture in the longer sense. So, because most of what we teach our clients, again, is back to understanding the system, how it works. And once you do that, I find people we've worked with proposals who are now out of proposals or very late in them are much more savvy and assertive about what they do after they file, because now we've kind of helped them have the ability to say no and to understand that I didn't need all that stuff. So it's a tough conversation. I'll close with a story just because it was just this morning, like right before a client of mine, or a guy who's going to be a client of mine. I said to him, you got to get a new bank. He's going to get a new bank. So he phoned me. He said, I went to close the old bank. And I said, no, I told you not to. Just don't let them close it, because they're going to try and sell you. And what they did was instead of him just phoning the bank and saying, I want to close this, they offered to increase his credit limit on one of his cards that he's putting into a proposal. Yeah. He didn't tell them that, of course, but like, that's a perfect example. You can't even close it without them grabbing your leg before you leave. And so I wanted to illustrate that as a blatant example of a bank, not letting you get out the door, even to, before giving you $10,000 more. Like, it's just
I guess one of the benefits of COVID is that we don't go inside banks anymore, because every time in the past I went in, you put your card in and punch in your thing, and they go, oh, Mr. Hoyes, boom, because of course the computer has popped up the 3 offers they're going to make to me today.
They're right on the screen.
Yeah, it's like, oh, we can increase your credit limit. Would you like, oh, you've got money in your bank account.
If the client tries to close his account, what do we do? Give him the $10,000. Yeah, and
the person you're talking about has a bunch of other debts.
Yeah,
that's why he's coming in to file a proposal.
And they probably know as soon as they look at the report.
Yep. But it's all being done in the background. So,
but it's also, by the flip side of that is, since most banking and lending is done online now, it's a hell of a lot easier to say no online, or on the phone, than it is in person. So now you've just, the banks can sell more, but you can also say no more.
Yep. And I think that's the answer. You can say no and have a plan. I guess if there was one thing I take out of everything you said today, that would be it. Have a plan going in there. Stick to it. So I know
I'm not leaving here with debt I don't need.
Right.
So you can say whatever you want, and I'll listen, because I'm polite and it was raised well.
I'm Canadian,
but I'm not going out of here with it.
Then I'm leaving. And you said, would I have bought this today anyways? So if I'm at the grocery store, okay, well, the whole reason I went there is I need food today. Yes, I would have bought that regardless. But if it's something that I have to borrow to buy, am I doing this because I've thought it through? And yes, I do need a new vehicle because I travel to work, but there's a bunch of reasons for it.
Yeah, the chances today of sitting with someone and having to say, S&R, much less than they used to be. So you're automatically at an advantage in the sense that, 90% of what you say no to now will probably be online or impersonal, so it's easier. But even for the rest, you can prepare for that and have your own script. They have their script.
Yep.
So you have yours too, right? And just, just say, like, I'm not getting that.
Yep.
And let there be an awkward silence. Who cares?
I give clients that exact advice. Take a piece of paper and write down what you're going to say. So when you're sitting there at the bank to open a new account.
Yeah. Or trying to close one.
Or trying to close one.
10,000 more is a limit.
Thank you very much. I don't need that now. Thank you very much. And you've got your you know what you're going to say.
Yeah.
It's a lot easier to extricate yourself from that situation.
And prevent.
There you go. So, Scott, thank you very much.
Thank
Hopefully
you.
it's not 3 years before we're back in the tiny little room here in Toronto. That is our show for today. Again, have a plan in advance. And you can say no. You're in charge. You can say no. So if you do that, you're probably going to be in pretty good shape. Thank you for listening and watching. Again, if you're watching on YouTube, help us out with the algorithm by pushing all those buttons, subscribing and notification. There's a new show every Saturday morning, and most of you listen to the audio version of this, so you can't see us in our closed little studio here, but we appreciate you for that as well. Spotify, Apple Podcasts, everywhere you get your podcasts every week. Thank you for listening. I'm Doug Hoyes. Until next week, that was Debt Free in 30.